Now going to open up a panel discussion, which for the benefit of the audience, we're going to have the three companies that we just heard from, Chalice, DGO, and Lefroy. We're going to have Ross on, and we're going to have Merlin Marr Johnson, who wrote the Discovery White Paper that helps us to decipher these fabulous words like flamboyant or something or other that Ross just mentioned. And we also have Ned, who's the man with the $1 billion sitting in his precious metals fund in London. Merlin, I'm going to invite you to ask a question of the panelists first. Over to you.
Simon, thanks. Gentlemen, really great talks. I've actually got two questions. Perhaps I'll start with Ross. You've been talking about the game change in geochemistry, and yet, actually, when you look back at the recent track record of discovery in the exploration sector, the rate of large discoveries has dropped off dramatically in the last 10, 15 years. All the the big deposits were found in the 70s, 80s, and possibly in the 90s. And so there's been very little of the major discoveries that have come through. So when you talk about this the change in the ease of access to, or interpretive ability of the geochemistry, what's the lag time, and how long is it going to take before you see those techniques being applied to the next generation of major discoveries?
I don't think there's much of a lag. I read it a little bit differently. I think the last 18 months has seen a pickup in discovery rate, and that's going to continue for the next several years. And as Ned said before, I think that we just haven't had much exploration. We haven't employed the new technology that we now have. And I see geochemistry approaching the value of geophysics, where you can target below cover and discover ore deposits. So my feeling is that we're not going to have a big lag, that there's going to be new discoveries coming online within the next 12 to 2 years, 1 to 2 years, and this will build up. We'll see an increase. I'm very excited about the next 7 years. I think with the new technologies and the aggressive nature of exploration and the good investment atmosphere that we have now, I think we're in for a real good run.
Thank you. That's really interesting. And of course, yeah, Julie Marr is a big discovery, and Hemi as well. So yeah, you're right, they are coming through. Ned, I've got a question for you, if I may. You talk about leverage, momentum, and narrative, and you say that we haven't really seen the momentum yet in the sector. And yet, if you look at the metal prices for the last 12 months, we've seen some spectacular gains where all-time highs in copper prices. Gold is retouching its highs. Do you see that there's further to go in underlying metal prices? And of course, there's this, to us in the junior sector or the resources sector, it feels like this is a bit of a bull market. So when you talk about the momentum hasn't actually come through, are you saying we ain't seen nothing yet? I mean, what do you see in terms of timelines and the impact on particularly on metal prices underneath?
Yeah, I mean, I think it's absolutely the foothills, Merlin. We've not seen anything really. All that happened is that last year, I mean, it's slightly different for me because I focus on gold and silver, so I have to really narrow in a bit on that. But I tend to think that also that leads the interest into the other commodity exploration end. I think it's sort of the focus. All that happened is that last year the market got overly dovish relative to the Fed's guidance. So the Fed's been very sort of even in its guidance, which is rates at zero, let inflation run hot, not going to do anything. And the market got over dovish last year for a bit and was talking about negative rates. That drove some money into gold and silver, and you saw Citadel, the big hedge funds, take levered positions in indices like GDX, GDXJ, etc. So that was your momentum and your leverage in, but it wasn't that big. It was pretty minor, really. There's a bit of tourism for a while, and then the market got overly hawkish relative to the flatlining guidance for the last 6 or 7 months. what you saw then was all of it came back out again. And you know, the market now, I'm afraid, is just an absolutely, you know, moronic single cell beast that can't focus on anything for more than about 3 seconds. And when it attaches itself to the issue of purchasing power, and it feels like it's getting closer now, you know, the market's definitely more interested in inflation. But remember that the bond market's also been pricing in hikes, which aren't going to happen. So that's why we haven't seen it really happen yet in gold and silver, because of course they're driven off real interest rates. But you know, I think they will get a frenzy, just like you see in other areas. You know, I mean, look at your Teslas and all the rest of it. You know, the market loves nonsense and loves speculation. And you know, certainly you'll see a whole bunch, in my opinion, you'll see a whole bunch of absolute turkey exploration stocks fly like eagles in due course, which hopefully doesn't involve anybody here, by the way. But you know, I think it will happen, and it's still very, very early in the overall trend in our view.
Nice one, Ned. Enjoyed those answers. I'm going to ask each of the mining company CEOs, so Ed from GGO, Alex from Chalice, and Wade from Lefroy. Could you each, gentlemen, around the table or the Zoom webinar, tell us what are the tools that you use to give your company an edge? Is it technology? Is it the insight or experience that Ned had referred to? What is it that makes your exploration efforts better than others? Ed, maybe start with you if that's all right. Are you muted, Ed?
Thanks, Simon. As I indicated earlier, I think for us in particular is the focus on Australia, and in particular in Western Australia, when you accept the fact that large areas are undercover and are very lightly explored. And we're seeing this coming through in our discussion today, and you see it on a regular basis. Our view is to, if we can, to obtain and lock in large land positions. And that can be directly or invest in companies that have large land positions. And that's why the grey, you know, on many fronts clearly meets that criteria, as does Dacian in a relative sense, and Yandal also. We like to think about what might be discovered before it's discovered, and what it would cost to do that, and that process in each case requires us to look at the existing resources, to look at the potential extensions. This is in the brownfield space, to look at the extensions, to look at what hasn't been found and where it could be found, and if it was to be found, how much it would cost. And so we actually get, as part of the process of zeroing in on De Grey as our number one investment, 3 years ago, it hit the spot. It hit the spot in terms of scale. It hit the spot in terms of the likely low cost of finding ounces. We all know that if you can find ounces at $10 an ounce and the market values at $100 plus an ounce, that's actually a really good business to be in. As we've demonstrated over and over again, I think you get an edge by engaging with the academics, with the research specialists. And as I said during my presentation, that's something that I've been doing for the last 40 years, and it works if you accept the advice and then take the risk accordingly to test the advice that you're getting. I guess finally, my experience is that we get an edge by, in fact, doing core drilling early and understanding the geology early. And so in each case, like now at Briar, we're core drilling in an area where there hasn't been any core drilling for at least 50 years, if not longer. And the information we're getting out of those holes support our thinking and strengthen our knowledge and strengthen our ability to analyze what's happening there. Sometimes it's quite unexpected, and sometimes it's much better than what you expect, and sometimes you say, okay, well, we actually need to move on. So this proof of concept drilling with core drilling is a really critical element of early success. And so I think they're the key points, Simon.
Thanks, Ed. Alex from Chalice, what would your answer be to the question, how do you gain an edge? How does Chalice make itself successful as one of the world's best exploration companies?
I think it was three things for us, Simon. It was, I think you mentioned it at the very start, you got to pick your trend. You have to be exploring for commodities that are going to be in demand. So about 4 years ago, we set about finding a nickel sulfide asset, and we quickly worked our way down the list of development-ready nickel sulfide plays globally, and didn't find much at all that was basically sitting there ready to be bought. So that's what led us to peg, very large license holdings all around WA for nickel sulfide. So we picked that trend that we wanted to be in, and we made a big bet of the company, I guess, into nickel sulfides. The second thing, I think, as what Tim alluded to, is risk appetite. You've got to be willing. You've actually got to be willing to bet the company and put your livelihood on the line. And I think that's what we did. We had a decent balance sheet to play around with exploration, but we did bet the company on the outcome. So a lot of companies out there, say they have the risk appetite, but they frankly just don't spend their money, and investors are demanding companies spend the money. So that's one of the things we've done. We've spent heavily, and that leads me to the third point, which I think is that you have to iterate quickly and you have to fail fast. It's a bit like the pharmaceutical business. You get it wrong as quickly as possible, because it is a numbers game. You're only going to deliver a fantastic discovery 1 out of every 100 attempts. If you're really good, maybe 1 out of 50. So you have to be willing to really iterate quickly and get to that failure on the 49, so that then when you have the 50 come up, you're in a good position to capitalize. I think it's all those three things, and then on top of that, of course, you have the science, you have the best smarts in your company, and you need some luck as well. Honestly, I think that's really what drives exploration success.
Very comprehensive, Alex, and that makes complete sense. Wade Johnson from Lefroy, what would be your answer to the question, how does Lefroy Exploration gain an edge in finding big ore bodies?
Yeah, thanks, Simon. And probably go along a couple of those points that Alex and Ed put out are probably a bit of a common theme. But I guess one of the key things, one of the great things for Lefroy is, the first thing you've got to get is the land. So you've got to pick the areas you want to be in. And I guess our ground monitoring and I guess knowing the areas you want to be in, and constant monitoring of the land, picking up the land and getting land granted, getting access to land quickly is very important. And I guess that's what we done with the Burns discovery. We got it monitored that ground for a very long period of time, watched and waited, and pounced when the opportunity came. Got the heritage survey done, got the ground cleared on the ground within 6 months. Drilling made a discovery, so I think that's important. I go along with that. I definitely agree that diamond drilling diamond early is very important, and that's one thing we've done. Both the discovery made at Lucky Strike, did the air core drilling, no RC, straight to diamond, made that small but a gold discovery, a virgin gold discovery at Lucky Strike. And then the same thing what we're doing at Burns. I think, like Alex said, we're doing the diamond drilling early, understanding the system. And we're certainly taking some risk drilling these really big deep holes without any results. I think diamond drilling early, the ability to pick up land and monitor land to pick up land. And I agree with that, getting academics and the government involved in assisting with the exploration. They can do all the academic, they can do all the research, and we take the key points out of that to use to get, to guide our explorations, make mineral discoveries. So I think they're really important. And I think probably the one key thing also is patience. I mean, with Lefroy, we've picked our ground, the area we wanted to be in. We've been there for the long haul, 5 years. We've been there, still doing the exploration. And I guess, been in the exploration game a long time. And I think a key one is, picking the bones, as I call it, is really going over old ground that people have been there before, such as Burns. Companies have been there before, and looking at areas where we think we can pick something that the other companies may have missed, haven't observed the right things, and seeing that, and that all comes with experience, and then guiding the exploration from that. So I think, diamond drilling early is very important to understand the rock types, patience, taking some risk. And I guess the key thing is, if you don't have the land, you're not exploring. So getting ability to get ground, and getting ground cheaply, and getting access to the ground is very important.
Thank you, Wade. We're now going to wrap this panel discussion up, and I'm conscious we have got half a dozen questions which folk have sent through. Just in the interest of time, could I ask that you email either myself, scat@agam.co.uk, or Danica at Investability, and let us know your question and the company for whom the question is directed, and we will try and get you an answer.